this webisode. Wow, I sincerely hope you bought some laxatives because we're about to clog up these charts. Guys, as we tweeted out yesterday, any moves for Bitcoin below 10,600 do not mean a whole lot in terms of a bullish breakout. Bitcoin broke 10,470, which was clear resistance for the past few days, going back to September 7th. However, we immediately got rejected right at 10,600 exactly on the dot. This purple line being incredibly critical. It was one of our first areas we went down to for support back the very first day of August. And again, this is still providing some clear resistance. We're going to take a look at these charts and what is most likely next. Blow your nose and tickle my toes, guys. We talked about this bearish cross recently. However, did something exactly the inverse of it happen just within the past year? We're going to jump into that and show you what this means on this chart. This $10,000 area was a key critical point in both of these patterns, both of these fractals, so we're going to be diving into that as well. And Ethereum has seen explosive moves every time this has happened on the chart, and it is happening within the next 24 hours. Let's do this. Wow, welcome back, Scourge Squadron. I hope you brought a towel because it is about to get downright disgusting in this webisode. Guys, we're going to be jumping into Bitcoin's price and as well this very key move that we saw in the last 24 hours. What does it mean for Bitcoin's price as we continue to trade in one of the least volatile ranges in a very long time? However, guys, two important things are about to happen. We're going to get the weekly close on Bitcoin's weekly chart, and as well tomorrow we're going to see an explosive opening for the stock market. Most likely we're going to be glued. We're going to be glued to that chart because, again, I think that'll play a very, very big role in Bitcoin's direction over the next few weeks. And as well, we're going to be talking about Ethereum and what's going on its chart, and as well something very interesting we saw with Bitcoin with this exact BART pattern, both about a $2,000 BART up and down. I'm sure you guys know what the BART pattern is that we saw last summer, and we're seeing something identical now. And what would it look like if this continued to play out like the previous time? Absolutely savage. So as well, guys, if you're new to the channel, make sure to turn on those subscribes, hit that notification bell so you get updated when we upload new content like this one. Make sure to drop your comment below, guys. Let's try and aim for 1,500 likes in this webisode. And without any further goo goo gaga, let's dip our toes into these charts. Guys, massive. So we were facing this $10,460 level multiple times. This is the 4-hour chart. Okay, the first time we failed to hold this back on September 5th. We got rejected very strongly on September 8th, and then again rejected very strongly on September 10th. And we just broke out of it September 12th. And guys, what do you see? We immediately get rejected at that very key level, 10,600. Wow, that is a straight line. Look at that. And look at us now. We're actually about $300 below that, around 10,300. So about a $300 rejection on these 4-hour candles. So what does it mean for Bitcoin? Well, for one, we have returned. We have still not seen any volatility increase. For over a week now, we have been seeing some insanely reduced volatility on Bitcoin's chart. But really interesting here, as we've been talking about, we're getting this bearish cross where we're getting a 21-day moving average for Bitcoin crossing below the 50-day moving average, this green line. Okay, now we see these crosses pretty often. There's something I really want to point out because we've already talked about these crosses prior. You know, most importantly, the last time this significantly happened was back in March of 2020, right before the massive dump to like $3,000 for Bitcoin. So obviously that was very bearish. However, this is what I want to point out here. So back in the summer of 2019, we formed a bearish triangle. This is a descending triangle, which is usually a bearish pattern, and we broke down out of it. Okay, that's exactly what happened. And then you see represented in this kind of rectangle here is that we immediately barted back up to where we were right before we dumped. Okay, so we dumped from 10,300 all the way down to a little under 8,000 actually. Okay, so over $2,000. And then we immediately barted back up actually from about 7,003 all the way up to 10,005. So over $3,000 just a few weeks later. Okay, so we see that massive BART after this bearish triangle. And as that was happening as well, we formed this cross where we had a 21 come above the 50-day, which is a bullish cross. But instead of anything bullish happening, we in fact dumped very much. Now guys, this time we're seeing something very interesting take place as well. And keep in mind, this is all happening centered around the $10,000 price level for Bitcoin. Okay, let's really think about this for a second before we dive into this. 10,000 is a huge psychological level. It is a massive level for Bitcoin. We've basically been getting rejected off of it for the past year specifically. But more importantly, we're trying to hold it very much so right now. We're only $200 or $300 above it as I record this video. And that's one of the reasons why the price is so not volatile right now. So as we broke out of this bullish pattern, this ascending triangle back just a few months ago, beginning in May and actually breaking out at the end of July, something happened very similar to this, right? So we had a bearish pattern, a bearish triangle, now we had a bullish triangle, and we broke down from this bearish triangle. Here we broke up from this bullish triangle, and what happened? We formed an exact same BART pattern, basically the same percentage move as well. So after breaking out of this bearish triangle, we broke bearish, and then we immediately BARTed back up. And here we had this bullish triangle, we broke bullish, and then we immediately BARTed down. And as you can see here, guys, we basically came back to the exact same level where we were before we broke out, just exactly like we did back here. And interestingly enough as well, we immediately are also having the same cross. So instead of a bullish cross, this is actually a bearish cross, right? So we had a bullish cross back here after very bearish price action, and now we're having a very bearish cross here after very bullish price action. With that being said, the point of this is to highlight, is this in fact some sort of fake out, right? This was a fake out here where we had a bullish cross and then we dumped another few $1,000s all the way back down to 6,005 after hitting above 10,000, right? So like $4,000 dump pretty much after that, even with a bullish cross here. So now we're getting a bearish cross. And what are the possibilities that, we had this repeat, okay? These two are identical triangles, just the opposite of each other. Then these are identical BART patterns, just literally the opposite of each other. And then these are identical crosses, although exactly the opposite of each other. Now, with that being said, with this bearish cross, what are the chances that over the next week we actually get another pump up instead of down here, with that pump potentially bringing us above 12 and even 13K, right? This is just speculation, but it's something I think is very important to highlight because all three of those things are basically the exact same structure, just the complete inverse, right? And the reason this is significant as well is because it is happening, it's all centered right around this key area, which is the $10,000 level for Bitcoin. So just something I think is pretty interesting, keep in mind, right? We had very similar structures, and if you look on this chart, the two biggest BARTs, the two most apparent BARTs are back here in October of 2019, and now basically here in the middle of September of 2020, which is just very interesting, I think, right? So with that being said, am I bullish or bearish, guys? Basically, it comes down to this. If we break 10.6, then I become bullish. And that's really what I'm waiting for. Like I said, for the past few videos, nothing has changed in regards to this short-term price action. So if we break above this, and if we would come back down to just to cement that, because again, I think the momentum is just not very strong right now. So I don't think we would just pump straight up to 11K. I think we would probably come down and retest this. As you can see, guys, this price action is very, very weak. We've basically seen no movement for the past week and a half, right? So if we break 10.6, come back to it, and then reaffirm that, then I think we have a good shot at breaking 11.2 or 11.3. But we're not really anywhere near that right now. And guys, we have this weekly close. This is incredibly crucial. Remember, always got to zoom out. You always got to get that perspective as well, because we were just on the 4-hour and 1-hour charts. But you can see here, this 21-week moving average is key. We've gotten 2 bounces. We're going to be getting a close in about 8 hours from the time I'm recording this. So very interesting. Remember, it goes by UTC time. So if you want to know when it closes, just use UTC time, Coordinated Universal Time. So again, we're going to be watching for that. So far, this weekly actually does not look bad at all. We're getting 2 strong wicks right at this 21 week. But something very important, I think, to watch out for right now is Ethereum, as we have not gotten a bearish cross yet. As you can see, though, it looks as though this is going to play out. Let's actually zoom in really close and see what exactly is going on here. Yeah, these tips are incredibly close to touching. And I always say you never want to get the tips too close. It just spells bad news, guys. Just something you don't want to do. 100% bar none, hands down, definitely avoid that. But you can see these are all the other times we've gotten these crosses for Ethereum recently, and you've noticed that after each one of these crosses highlighted in purple here, there's been significant price action, okay? Back here in November of 2019, very significant dump. Then here back in January 2020, very significant pump, very significant dump after this one, significant pump after this one, very, very vertical pump the last time we got it back at the end of July 2020. So watch out for this. Ethereum is by far doing extremely well over the last few months. It is one of the best long-term bets out of all of cryptocurrency, without a doubt, in my opinion. So definitely want to watch out for that. And guys, as well, I keep getting people asking me about Chainlink. So far, Chainlink's price action is literally mimicking the rest of the market. We're currently actually below the 50-day moving average, and we're getting rejected off of there. So again, short term, it's not incredibly bullish, but we're seeing the exact same thing, just a little bit more delayed for Chainlink, right? We're coming into this cross. So one of two things could happen. We could get this bearish cross like we did with Bitcoin, or very interestingly enough, what we could see with Ethereum, like we saw back in July of 2020, just a few months ago. What happened is we were actually getting very close to getting a bearish cross here with the 21 going below the 50-day. But instead what happened is they both met up here and they did not cross. We got a massive pump here back on July 21st and 22nd of 2020. And we ended up pumping from $238 all the way up to almost $500. So now are we going to be seeing something like that as well? Okay, because at this point, some of these altcoins really have been taking the lead. So just because Bitcoin is getting a bearish cross does not mean, in my opinion, that every single cryptocurrency is also just going to repeat that exact same cross. Okay, because technically that could happen as we're still kind of, delayed with some of these cryptos. But again, I think Ethereum is the thing we want to be watching right now, especially as Ethereum and altcoins have just been dictating so much price action, so much bullish price action over the past few months. So I want to see Ethereum not get rejected here, which it currently did in the last 24 hours. From 386, it's currently at about 360, only $20. So we'll see what happens here. We'll see if we get across. But overall, I'm pretty optimistic on Ethereum. And guys, honestly, most importantly, we need to be watching things like the S&P, right? We need to see what happens here. We're at a very, very, very key critical level where we've come down to retest these highs from back in February 2020, right before the massive crash. Okay, we went on to set a new all-time high just a few weeks ago. Now, this is really going to cement that. Are we going to actually break down here, maybe go down to $3,100 for the S&P, which would not be bullish at all? That would actually look like that would look pretty bearish in my opinion, even reminiscent of what we saw back here in January of 2018, where we had almost like a double top with a slightly higher high here, but then we saw a pretty massive correction here. It was like an $800 correction over the following weeks after that happened. Are we going to see something similar, right? Let's say we do see something like this and we continue down here. And guys, it's clear to pretty much everyone in the space at this point, there's a massive correlation between Bitcoin and the stock market at this time, right? Maybe in the future, our hopes is that, they will decouple, but it's just nonsense to say that they are not at least somewhat correlated now. Well, you guys, so make sure to leave your comment below on this ledger. In your comment, maybe include what altcoin you think is going to perform the best over the next few months, guys. We're in such a key level, and that is 100% illustrated by this macro weekly chart. We can even look at the monthly. Again, this is just as important. You can just see it here. It's very clear. We basically want to hold these crucial levels, very lowest, as I said, like the mid 8,000s, I think is the very lowest to remain healthy. So again, we still have a pretty good amount of room below us where we can remain very bullish. And on this weekly, guys, let's pull this out. Actually, the Fibonacci retracement here. Obviously, we're testing the golden pocket right now. So this is just a massive area we want to hold. 618, and the 6.5 here, guys. This is just critical. We want to hold this. It's exactly what the 21 week is. And we just want to see a reversal to continue here, basically. Okay, I'm still eyeing up that potential for a wick down to the mid 8,000s, worst case scenario. Still considering that. But we need to see some sort of catalyst for volume. Because again, guys, the volume is just not really doing much right now, and that's why we're not seeing any volatility. Huge. So guys, if you're interested in learning charting, trading, following along with my portfolio, getting access to our Telegram, where we will be putting out some very key updates as critical developments in the market continue, make sure to use the code BILLIONS at checkout to get 10% off. And as well, if you're interested in trading, make sure to use our links below, 20% off trading fees for a limited time here on Bybit, and some very nice deposit bonuses on Bybit, Femex, and Dudex.